Hey folks, this is Henish here with the California Home Company, brokered by eXp. Now, a few days late into December, but I wanted to give a December market update because there's been some interesting things happening. I always try to scour the news and see what's happening, and I like to look at what's happening in Seattle because I feel like that's another hot market on the West Coast that we can kind of relate with. So check this out, this is interesting. Earlier in 2017, in March 2017, we were doing the numbers on the number of bidding wars in Seattle. In Seattle, if you're trying to buy a house, there was a 92% chance that you're going to have a bidding war on your property, which is a crazy number. It didn't drop much. Earlier this year, in February of 2018, we were still at 81%. So 4 out of 5 homes that you're trying to buy, we're going to get multiple offers, which is, I have friends up there, they were saying when we were trying to buy a house, they'd get outbid by $100,000 cash on a $700,000 purchase, which is crazy because that's how hot the market was, right? We all knew it and we all saw it. Now in November 2018, they're down to 21%. So it went from 4 out of 5 houses to now 1 out of 5 houses that are having bidding wars. So obviously San Diego's on this list, and so here's where we stand. In February of this year, we were at 72%. 72% of homes, if you were trying to buy it, would have multiple offers and you'd have to do a bidding war on that, right? Which, no surprise, we saw it, everyone heard about it, and that's what was going down. Now, in November, we've dropped, but not nearly as much as Seattle. We're still at 45% of homes last month had bidding wars on it. So if you got a nice property and it's priced right, expect that there was going to be a bidding war on it. We went from, I think, number 11 on the list to number 1. So now we're the hottest market in the United States with the most bidding wars. So there's a couple other places that are above 40%, Washington, D.C., Philadelphia, there's a few other places, Portland, that's still hot. And like I said, Seattle's down to 21%. So that's because they went super hot and then pulled back down. So that's still interesting that we still have a lot of momentum here in San Diego. What else is going on? There's less flippers. I saw this one. 12% decrease in flipping activity. Now it's only 5% of the market, and this metric is nationwide. So they are saying that that's a canary in the coal mine. They're saying that the housing market's cooling down. It's not as hot as it was, right? Because a lot of flippers would buy speculating that the prices would be going up 1% to 2% per month, and they would get it, and that was their profit. Now that they can't bank on that anymore, it's a little bit more risky to buy a property as an investor if you don't see that type of price appreciation coming. So there's less rookie investors in. Professionals like myself, we're still in the game. I just bought more properties recently, and I plan on making money on them because I know what I'm doing. New home building has slowed down. I've mentioned this months ago that that's another telltale sign of a slowdown. New home building has slowed down, and then SFR prices are dropping, right? We see the new developments in North County, East County, South County, and my builder friends are telling me that once another developer drops their price, then they've got to drop theirs, and so you see the prices dropping. It gives them less appetite to keep building more if they can't sell the ones they've got built at the prices they expect to get. So new home builder interest in the market has decreased, and you're seeing a lot of them shift towards multifamily. Single family is hard in San Diego to do, so most of the builds in San Diego and throughout the state in California are multifamily builds. 60 to 40 is, I think, the breakdown is about 60% multifamily still. What else we got? My smart buyers are still buying, so let me give you a couple anecdotes. My escrow company, the sales rep over there, is in escrow to buy a house right now, right? She's buying a house, and she's in the business. I'm shopping right now for a new house because I got a new baby coming to make it number 3 next month, and I'm quickly outgrowing my tiny spot, so I'm shopping for a house right now too because I still think it's a good spot to buy. In fact, I'm working with 2 buyers that are buying $4 million plus properties, and they're still buying houses, right? And the key things still remain is because they're buying because they're living in a house because that's where they want to live. They're not looking at it as investments, right? One of my clients said, hey, I treat my investments like my investments. I treat my family home as where I live, right? He keeps his investments in commercial or stock market or whatever it's going to be, and that makes sense. But if this is your house, let's try to enjoy it. Life is short. Live where you want to live and give your family the home they deserve. And if that's something that you can get them now, great. Don't wait 6 months or a year for a miracle drop in price. That might not happen. Okay, what else do we know? So, that being said, in the long run, your home can become a great investment, right? Just don't buy a house today and expect to sell it for more next year or in 2 or 3 years. Just no one can promise you that. It's not a safe bet, right? That's not a good investment bet. If you're planning to live in your house for 5, 10, 15, 20 years or hold it indefinitely as a family property, that makes sense, right? In California, we're going to have properties keep going up in value, and I'm confident in the market in that sense. If that turns sour, we've got other bigger issues to worry about. So barring major catastrophes, buy a house if you're looking to buy a house. So what are others saying? So homeowner turnover has been increasing over the last few years, and we're almost up to 10%. So there's a lot of turnover, showing confidence in the market and confidence in our area and the housing here. So that's a good sign. Homeownership rates are the highest it's been in several years as well. We're almost up to 60%. The state average is 55. The record was in 2006 when everyone was getting a mortgage, and that was only at 63%. So still pretty good. There's a lot of people owning homes right now. Prices are still going up. We see it most at the lower tier of properties at 6%. Mid-tier has gone up 5% over the course of the year. And even at the high tier, the highest tier, it's up 3%. I have a feeling that high tier is going to start dropping down as I'm starting to mess with $2 million plus properties and seeing some of those values drop as there's less buyers active in that price point. All the other metrics are increasing. Housing starts overall have still increased even though they've slowed down towards the end of the year. Employment's up, average income is up. All of those things are showing that we've got a healthy economy going into the end of the year. Like I mentioned earlier, multifamily homes are still the biggest push in terms of construction for builders. And one of the things that I saw across the nation was that Minneapolis just took away all single-family zoning. So now all single-family homes can now have 3 units on it, which is incredible. So they're trying to pack in density, knowing that you can't keep having suburban sprawl and support a proper city where it functions best with density. So really interesting to see that. There's obviously pushback from the NIMBY people saying not in my backyard, but overall, any smart planner or anyone that's in this business knows that having the density, let me stop the video, is necessary because that's how the best cities thrive. So the bottom line, I think real estate still comes down to the 3 basic rules of location, location, location. If you can find a house in a great location that you want to live in, I would say you should jump on it. The rates are still right, the pricing's still right, and if you're planning to live there for 5, 10 years or hold the property for that long, then do it. Don't wait for some miracle price drop. I mean, what if prices drop? Or what if interest rates go up? Along with the price drop, you might be surprised at how much that can affect your buying power. If you can afford $500,000 now and there's a rate increase, that might drop your price to $450,000, and those home prices, if they drop at all, might only drop to $480,000. So is that really worth it? Think about that. That's something a mortgage person can go over with you. So that's my update for today. If you're a professional investor, maybe you have different strategies for investing in properties, but if you're a homeowner trying to buy or sell your principal residence, do it. It's still a good time to do it. I would say don't stand on the fence, because people like myself, my escrow officer, other people that I'm working with as buyers and sellers are moving properties. So that's me, Henish Polko with the California Home Company, brokered by eXp Realty. Have a great rest of the year. Thanks, folks.